This John Lothian News video is sponsored by Markets are often touted as all about speed, but that reach for low latency is only part of a successful strategy. John Lothian News spoke with Derek Haworth, president of Born Technology Solutions, who says that more firms are looking to cut costs on exchange connectivity and order book solutions. Here's the balance between financial technology and expenses.
I'd like to point out that there's a fundamental difference between HFT and low latency. People seem to combine those two concepts, and they're truly fundamentally different things. What we've been seeing over the course of the last year to year and a half is that people are moving towards what I would call smart latency, where there's an understanding that spending an extra $100,000 to shave off another 200 nanoseconds isn't really commercially or economically feasible. So we're seeing the pendulum swing a little bit away from the lowest latency trade. We're seeing those changes primarily occur within the trading groups themselves, where they are refocusing on understanding truly where they make their money. That their money is in their smart algorithms and understanding the market directionality, and not necessarily applying those algorithms at the absolute fastest rate. We built the global order book in response to customer demand for a need for global transparency, meaning that at any given time, firm administrators, risk administrators, broker groups want to be able to see what's going on across the entire firm on all of their platforms at any given time. So we originally built the global order book to fulfill that need, so that administrators could see that snapshot, and have subsequently built new features on top of it to allow for more risk management and administration. We have not seen any other systems that effectively integrate all transaction flow in real time across multiple platforms. That comes back to what I was referring to when I'm talking about smart latency. Firms are understanding that the actual infrastructure, the bare metal, power, cooling, networks, and exchange connectivity are really the enabler for their trading algorithms. They're rarely a competitive edge. So particularly in today's cost-conscious environment, where there continue to be pressure on profits, people are continuing to outsource those core components to people like Born who have economies of scale. When we started the company in 2002, it was a significant uphill battle to get institutions, particularly larger and medium-sized institutions, to outsource their IT functions. At that point in time, companies were flush with profits, and they had large budgets to build out what they considered at that point in time to be a competitive edge. Post-2008, where profits are slimmer and people had to find ways to do the same things, to deliver the same functionality to customers, but on a more cost-competitive basis, we see the vast majority of firms moving to outsource the infrastructure functions.